The S&P 500 sold off today 0.84%, and we are going to go over the game plan. We're going to go over the levels. We're going to go over what I plan to do with going long and where I plan to go short. We're going to talk about the unusual flow that we saw come in today, both with the S&P 500 and some other names. So we're going to first start off with the levels. And as I've been telling you all, the last 4 times we've seen my daily signal line flip red, we've seen price move into the 730s. I told you it happened here, it happened here, it happened here, and here. The last 4 times, price is sold to the 730s. And I said we do have price seeing that signal line turn red and price is selling off with that. Do we go down to 730? I don't know. I can't tell you that. My game plan here is to buy at 758.70. If we can get, and you can see I've got an alert right there, 758.70. If we can get down and fill this gap here, retest the breakout, and bounce, that's going to be a very good sign that buyers are stepping in and that we can continue the run and that this was a true breakout. But here is the deal. If we see price move back into this liquidity level and close a daily candle below this level, that is going to tell us that this was nothing but a false breakout and this was nothing but a liquidity sweep to send price back inside the range. So as you can see here, this is one of my new tools that I've created called the Range Break Pro, and it says breakout here, right? And it gives you TP1, TP2, and TP3, right? Up here at 790, 805, and 815. But if I go over to this tool into my settings and I turn where it requires volume, okay, you can see when on, a breakout only counts if that week's volume meets the threshold. If I turn that requirement on, you will see that the breakout goes away. It is not a breakout. There is no TP1, 2, or 3 if I have that on. But if I take the volume requirement off, we have a breakout. So what does that tell you? Well, there's not much volume to support this breakout here. So what does that say? Well, we could definitely see price move into this liquidity level again, and this be nothing but a liquidity sweep. But I will give this breakout the benefit of the doubt. Again, I will turn bearish like a fish if my signals turn bearish. And right now, if you pull the signal line up, you will see that my hourly is bearish. My 4-hour is bearish. My daily is bearish. And my weekly is almost about to flip bearish. My monthly is still deeply bullish, and we've talked about this as well. You can see a bearish month, you can see a pullback inside a bullish regime. Just because my monthly are bullish doesn't mean that we can't go down. Just because I'm seeing 800 by December doesn't mean we can't go down first. Okay? Big thing here. You can see inside this bullish monthly signal line, we had 3 months of drawdown. We had a month of drawdown. We had a red month of drawdown. We had a red month here, okay? Just because we had a bullish regime, we had 2 months of drawdown. We had a red month here. We had a red month here, okay? And going back further, you can see just because we're in a bullish regime right here doesn't mean you don't get a pullback, okay? Just because you don't get a pullback. So I just want you all to be aware of that. Just because I'm in a bullish regime here with my monthly doesn't mean we can't pull back, because we have in the past. So the monthly is our destination. The weekly is our pathway there. And as you can see, the weekly right now is bullish, but it is pointing down. And we are seeing whales load up, okay? Whales are loading up. You can see we saw a $26 million position open at 763.57 for 750s for November, above the ask. Yesterday, we saw more. We saw another 918 one today. 3.46 million today, above the ask. 756. That's above the ask. This is at the ask. Okay, the thing is, we're seeing whales continue to load up here for the bearish thesis going into September. And if we come over here to the seasonality, guess what? You can see that September is the worst month in the stock market for the S&P. It's one of the worst performing months in the market, okay, for the S&P right here. September. October is a little bit better, but September is pretty bearish here, seasonality-wise. And then count the midterms. We do have a imbalance on the daily, sitting right here at 758.70. For those wondering why I'm waiting, and I'm not going to do 760. I'm going to do 758.70. We did open up a September put on our options fund. We opened up 2 of them, actually. We will take those 2 off if we get down to 758.70, and we will add to November calls at 758.70, and we are going to set a tight stop loss if they drive price. And please remember, I don't need the trolls coming at me on X or wherever, okay? Stops are completely fine. You get stop lost, who cares, right? We're going to get in right here around 758.70, and if price is closing the daily candle below this liquidity level where we broke out, okay, if we don't bounce at the breakout zone, if we don't see basically the momentum we had here come in when we get back down into here, that's a bad sign, and we will close if they drive price below this liquidity level. So I'm going to go in long right here, see how we close the day, see if we get a reaction here at 758.70 for the move up to TP1, which is on this breakout pro, TP1. I want to also mention that my 4-hour is red, but the TS cycle system, which is another tool that I've developed, is still in position. Okay, I do want to let you all know it is still in position. If I come over here and I turn the table on, you will see it popping up right here in position. Green but declining, bullish super trend. TS cycle system is in position, and it is down 1.8%, and it has a 91% accuracy. You can see here it got in back here at 748, and it stayed in even during the drawdown there, and then later on rode it up and took a profit up here with a 3% profit. So it is encountering, because it's using an ATR trailing stop and equal high profit in with the requirements, which is why it is still in position. It might be red down here, but it's still in position. So the thing is, it went long right there. It held through this because it knew it was going up. Okay, guess what? It did, and then it took a 3% profit. So I do want to let you know that it has a 91% accuracy, and it is still in position. I took a lotto out for tomorrow because we do have a 5-minute regular trading hours imbalance, okay? A 5-minute one. And you can see on average, they eliminate within 3.3 days. We have 4 out of 153 of these, 149 have been eliminated, and you can see we have a total active of 4 that are open. If I reset here, you will see we left one at 640, we left one at 660, we left one at 680, and all of the others have been taken out to perfection. You have 4 of them. You have one there, there, and there that we left behind, and then we have only one sitting up here, and it is sitting right there at 770. And guess what? The average days to eliminate is 3.3 days. And guess what? This is going on day number 2. It has been open for 2 days now. And guess what? That is a good enough explanation for me to get in, for me to try a lotto for tomorrow. Going on day number 2, average days to eliminate is 3.3. If you come over here to SPX and you look at the heat map, that's another thing. You're getting some nodes that's showing up right there around 7,700. Okay, could we see 7,700 tomorrow? Possible. 7,650? Possible. Could we see that imbalance up there at 771? Possible. With OPEX, anything is possible. Is it likely? No, because the 30 minutes red, the hourly's red, the 4 hours red, and the daily's red. Bearish momentum is showing up. The only thing the bulls have is a retest of this breakout. If the bulls cannot defend 760, this thing is going back into this golden pocket right here at 739. Okay, will I try a bounce at 760 with November calls, probably strike 800? Yes, I will try. But if they drive this price and close the day below, I'm out. And I'm going to look to grab calls right there. And I'm going to look for a put entry with those whales that we've seen load up. Maybe around 771, around this gap fill. Whether I get stopped out of the calls or not, I will look for puts around 771, 772, somewhere around there, and I will look to ride them down further. It depends on how we react right here at 760. All eyes should be on this breakout level right here. Do we come down and bounce, or do we send it lower? That is going to be what you need to watch. Super trend's green, monthly still green, bullish regime is still green, 800 is still in play later on in this year, but that does not mean we cannot pull back to 740 and 750 before that continued rally in, let's say, October, November, December. We can pull back to 740 or 750 by the end of September, by the end of September, and then continue the rally higher. Okay, structurally, that would still be healthy. That would still be bullish because you would have a low here. Okay, you have a low right here. You have a higher low right here because I don't count that little crazy wick that happened that one day that was really insane, that did not even really hold too much weight. It happened right, like it was like a split second thing. That doesn't mean anything. You have a low here, you have a higher low here, you have a higher low here, and then this to 740 would be nothing but a higher low for a higher high up to 790 and 800. Okay, even if, again, even if we break below this liquidity level, structurally, this would still be bullish. But I'm going to try this retest of the breakout for a move there. If they send it lower, we'll get out. We'll re-enter down here at the golden pocket. I love every single one of you guys. I will see you guys and girls tomorrow in tomorrow's video. For those in the Discord, I will see you all in the chat room. Let me know if you guys have questions. And I am out of here. Literally, make it simple. Set your stops. A lot of people like to say, hey, I could get in there. Then I could try. Well, maybe now that we're here, we could get in here. And maybe now that we're here, we could get in here. Who cares? Pick your level, set your stop, set your profit target, and let it be. Let the trade breathe. Let the trade go, and size and risk accordingly, and then go from there. So that's my game plan here. Again, puts around 772, 775. Calls right here around 758.70. Okay, stop loss, a break back down into this liquidity level, re-entry if we get stopped out, golden pocket, target 790. Okay, that's as simple as it has to be. If you guys have any questions, I'll see you later, and drop them in the comments.